Peter Mcguire, CEO of XM Australia, jumping in at late notice this morning because Mehmet Aguchu, one of our also regular commentators, fell ill overnight. I was hospitalized. So we hope Mehmet is doing well and we will have him soon again on the airwaves. But Peter, I wanted to get a good opportunity to get an update from China, Asia, Australia this Monday morning after the big US election, where the other thing that happened in the noise of last week that didn't get a lot of attention, China did another kind of stimuli
Yes.
that fell a little bit on deaf ears. Your thoughts on the outlook from Asia this Monday morning after the big election?
Well, Sean, I think when we look at China and we understand the predicament they're in, and lovely to join you all. And yes, we wish our dear colleague a quick, quick turnaround as far as health. For every 1 unit of GDP the Chinese economy produces, it's 3.66 units of debt. So this is the debt burden that they face. We're in a debt spiral. We understand China's GDP ratio hit a whopping 366% in the Q1 2024. It's double the as far as debt to GDP of 2008 GFC crisis. So that's the critical issue, Sean. How does it deal itself out? We understand the Chinese stock markets had a big rally at the end of September, early October, extremely hot, up 20% or more. Some are 25%. They've given up a bit of hot air, but it's still extremely big lift off. Where we are with President Trump, and we understand the conditions, and as Omar said, it does seem to be a little bit of a race to the bottom as far as energy prices at the moment. We'll just have to see where President Trump wants to take this, but we understand 22% of global production is coming from the States, 64% of that internalized in shale, and he wants to boost that shale output to 80% or more. That's the word on the street. So if that's the conditions, then he'll naturally lift production. Is he capable of doing 25, 27, 28 million barrels a day? Who knows? He's going to make LNG the #1 producer as far as states, so that's going to be hard on Australia and Qatar, I'd say. So price is going to be interesting, that dynamic. Bitcoin's up 81,000. That's his favourite toy at the moment. And of course, US dollar index cranking through 105, Sean. It's really got a lot of hot air behind it, hot energy. So we'll just see how it rolls. Asia's looking interesting. US equities at all-time highs. Russell 2000 up 8.5% last week, Sean. Massive move. And you've got the Nasdaq. Who could have imagined? Nearly 19.3. S&P just shy of 6,000, and Dow just shy of 44,000. So everything is on fire with US equities, and US dollar up. Everything else is being crushed. Gold's off. So, great week for trading if you look at last week, and I think this week's going to be a great one to trade as well.
Peter, I mean, we had a fairly flat extra stimulus from the Chinese last week. I had some reporting on our podcast over the weekend that signaled, well, maybe the Chinese were holding back some of the big guns because they're going to need it when Trump comes at them with big tariffs in the new year. Your thoughts of where China's at, willingness, ability to stimulate their economy, and how challenged are they going into the new year?
Well, Sean, you've got to think of, what this impact is as far as the traction that they are trying to achieve when you've got this debt spiral. And this is the issue. So how do they get themselves out? They've either got to be tax incentives, infrastructure spends. It's got to be, I think, probably the re-engagement of domestic demand, and really try and get consumption going across the fabric of China, and really boost that. And then you're thinking about, well, where does President Trump play? And the reintroduction of large tariffs for selected items coming into his
I don't think it's selected. I think it's going to be across the board.
Well, pretty much across the board, but some are going to be more so than others. They'll be in the sense of luxury items. I've seen that there's different ratios.
What's the China reaction to that? Do the Chinese have a card to play against that, or what?
I don't know whether they do have a card to play, because when you're looking at non-financial corporates, they have the highest ratio as far as debt. and they're running at around about 171%. The government sector's at about 86%, Sean. So you look at the numbers and you say, well, what happens as far as consumption, and what does the government need to do to get to where they have to go to? And as you know, in a deflationary time, it's very, very dire from an economic situation. So what stimulus, how will it happen? Households, and I've got some notes here, and financial entities, debt to GDP is 64 and 45% respectively. So it's going to be very hard for consumption internally. It's going to be hard to deal their way out. And I think it's just going to be a work through to see where President Trump changes the deal of the game. And if he's to do what he says, which is to bring manufacturing back home, this could really cripple China, I think, over the next matter of years. If he is so aggressive, that's his ultimate strategy, is to bring all that manufacturing from offshore back to onshore, being in the United States. And it'd be to everything that Kissinger did, he's going to reverse back to the United States. And he's also, with the likes of Musk, and you've got to look at it really in the big picture, they want to downsize government by 80%, if not 90%, I heard. So all of those workers are going to be looking at new enterprises to join, and that'll be private enterprise and the likes of manufacturing or whatever else across, corporate America.
So big, clear. So China's toolkit to challenge this Trumpian tariff universe is going to be limited, and it's coming at a time when obviously they are also struggling. But it's also inflationary on a big way for the US, because everything obviously becomes more expensive if you put tariffs on it. It's not like the guys who are making it.
Well, there's another side to that as well, and he's talking about less tax for the consumer, for the US resident. He's looking at no tax on overtime, and he's talking about doing whatever the deal is going to be with the Fed. So there's plenty of talk about
the deal with the Fed is you're fired. Peter, looking out to the sort of end of the year, China typically going into the winter, the Chinese New Year, it's usually a good buying period for oil into the Chinese inventories. Your thoughts on whether that still plays out going into this sort of typically higher demand season in China and Asia as a whole?
Well, you would think so, Sean, and that could support, certainly from a demand side. Yes, I'm having a look also at copper down 2.3% on Friday. So maybe we're seeing a little bit of that downdraft across all of those hard metals and the energy sector. So there could be further downdraft to, see where crude trends over the next, if it builds on what Omar's thinking and what I think the general consensus is. Brent probably under 70, maybe even those high 60s, and we'll just have to see whether it's got the legs to go lower. I'm waiting here to see how the rest of the year rolls, because there are so many components to this. You've got a fully priced US stock market. You've got Asia's stock markets at very, very lofty heights. China's well bid up over the last, as we mentioned, the last 6 weeks has been absolutely electric. I want to see if any wheels fall off, Sean, because it just seems to be there's so much good market sentiment at the moment, or frothiness. This could quickly get wiped out. Are we going to see that other rate cut in December for the Fed? You've got inflation ticking up. Core PCE also forecast to have ticked up in the States. That comes out this week. 3.3%, expecting 3.4% or higher for October. So the storyline, 25% basis point cut for the Fed, the 10-year yield.
Well, just in terms of the, something, it's too good to be true, kind of everything is frothy. We've had the great wise Warren Buffett be selling a lot into cash in the last few months. What do you think he sees that not everybody else is seeing?
Well, Jeff Bezos as well, all of them are. So I think it's the old story, Sean. They're seeing the numbers. You can't get around the non-farm payroll that we saw last Friday. It was dire. There was 12,000 jobs, 40,000 were government, and 28,000 jobs lost as far as private, factory and so on. That really is damning, and that's going to cause much concern for Fed Chair Powell. He realizes I think the fragility of the US, employment situation is very dire. Companies are downsizing, and all of that's got to be washed across. So if you see a wipeout, I don't know if it'll happen before President Trump's inaugurated, but I wouldn't be surprised, the first quarter, it's going to be very tough on US equities to continue this uplift. And so that in turn would impact, I think, Asian equities as well.
Thank you, as always. Great to have Omar Najia, Global Head of Derivatives at BB Energy, leading us off each week. No better man for that. Peter Mcguire, the brain in Sydney, thank you so much. And Yasser Maliki from the one and only MEES, Middle East Economic Survey, 50 plus years bringing great wisdom to the energy markets. Thank you, Yasser. Have a great week, everyone. All the best.